Welcome back, everybody, for another deep dive. Today, we are going to be exploring something a little bit different. We're going to be looking at how some seemingly random events like, crypto hacks and government policies can actually impact something as traditional as the price of gold.
Yeah, that's right.
Yeah.
It's going to be fascinating to see how these seemingly unrelated events might actually be connected.
Hmm.
I'm particularly curious about how government actions and, these big shifts in technology are influencing the way people choose to protect their wealth.
Yeah, for sure. Me too. And, we've got some really interesting sources lined up to help us explore this topic. We have an interview with Bobbi Eano of Path Trading Partners about gold. We have some coverage from CNBC on the record-breaking Bybit hack. And then we have some analysis from Morgan Stanley's Mike Wilson on the U.S. economy.
Wow, that's quite a mix.
Yeah, so let's jump right in and start with Bobby Yano's perspective on gold.
That's good.
So he makes this pretty bold claim that gold is a good investment across a whole range of economic scenarios, not just during inflation. He specifically mentions stagflation, recession, and even reflation. What are your thoughts on that?
Well, I think what's important here is that Eano is really pushing back against this idea of gold as solely an inflation hedge.
Okay.
He's arguing that gold's value as a safe haven asset shines through in any period of uncertainty.
Hmm.
So think about it, when the future looks shaky, whether due to inflation or recession or even, unexpected growth, people want something stable to hold on to.
Right.
And gold has historically provided that sense of stability.
Yeah, that makes a lot of sense. So in a way, gold is like an insurance policy against economic turmoil. It might not, make you rich, but it can help preserve your wealth when other assets are taking a hit.
Exactly. And what's really interesting here is that Eano contrasts gold with Bitcoin, which
Right.
is often touted as digital gold, right?
Right.
He argues that Bitcoin's current correlation with the NASDAQ makes it less reliable as a safe haven.
Hmm. So even though Bitcoin has that, kind of decentralized tech savvy vibe, it hasn't quite reached that same level of trust as gold. It's still somewhat tied to the whims of the stock market.
Yeah, exactly.
So he specifically recommends GLD as a way to invest in gold. Why do you think he's highlighting this particular ETF over other options?
Well, GLD is one of the largest and most liquid gold ETFs.
Hmm.
So it makes it a really, go-to choice for investors looking for straightforward exposure to gold.
Okay.
It's generally considered, a good option for those who want the ease and accessibility of an ETF without getting into the complexities of, owning physical gold or delving into futures markets.
Yeah. Okay, so that makes sense. Now, shifting gears a little bit to the Bybit hack. This was a massive $1.5 billion worth of Ether stolen. Can you break down what happened and why this particular hack is so significant?
Sure. So this hack really highlights a key vulnerability in how crypto exchanges operate. To facilitate transactions, they have to move funds from what's called cold storage, which is offline and highly secure, to what are called hot wallets, which are connected to the internet.
Okay.
And the hackers exploited a weakness during this transfer process.
So they found a way to kind of get in during that in-between phase.
Exactly. And what's particularly concerning about this incident is that the perpetrators are believed to be the Lazarus Group, which is a highly sophisticated North Korean cybercrime organization.
Wow.
Yeah, they've got a track record of hitting, crypto exchanges and financial institutions. Right. And they're known for using increasingly complex laundering techniques, which makes recovering the stolen funds incredibly difficult.
So not only was it a huge amount stolen, but the culprits are particularly skilled and evasive. This must have sent shockwaves through the crypto community.
Absolutely.
Yeah.
Anytime you have a hack of this magnitude, it raises concerns about the overall security of the crypto space. And for Ether specifically, this hack raises questions about its stability and its role in the decentralized finance ecosystem. After all, Ether is a major player in DeFi, and if confidence in its security is shaken, it could have ripple effects throughout that entire sector.
It's like one domino falls and then the rest could follow.
Exactly.
This Bybit situation definitely makes you think twice about the risks involved in the crypto world. It seems like there's always a new vulnerability being exploited, even with advancements in security measures.
That's right. And that leads us perfectly into our final source, Mike Wilson's analysis of the U.S. economy. He argues that excessive government spending is a primary driver of inflation, which creates its own set of uncertainties.
So on the one hand, you have this massive crypto heist highlighting vulnerabilities in the digital world. And on the other, you have government policies potentially contributing to instability in the traditional financial system.
Yeah.
It's almost like a pincer move on investor confidence.
It's certainly creating a complex and uncertain landscape for investors to navigate. And that's where the appeal of gold comes back into play.
Okay, I'm starting to see how these pieces fit together. This is where it gets really interesting.
Right.
So Wilson argues that government intervention, while sometimes necessary, can actually hinder long-term economic growth. He's particularly critical of tariffs, which he believes create disruption and uncertainty for businesses. He also points out that restrictive immigration policies, while often touted as, a fiscal boost, can lead to labor shortages and ultimately hurt specific sectors of the economy.
Right.
So we've got a potential mix here of inflation, stifled growth, and labor shortages, all contributing to a sense of economic unease. I can see why investors might be looking for safe havens in this environment.
Exactly. And that's why Eano's perspective on gold is so timely. He's essentially saying that gold's value as a safe haven is amplified when the economic outlook is murky.
It's like a hedge against the unknown. If everything feels shaky, at least you've got something solid to hold on to.
Precisely. And this is where things get even more intriguing. It really does underscore Eano's point about the, enduring value of gold as a safe haven.
Right.
In times of, economic or technological upheaval, people naturally gravitate towards assets that have a proven track record of preserving wealth.
Yeah, gold has that kind of tangible aspect to it.
Okay.
It's a physical thing you can hold, unlike a digital currency that could theoretically just vanish.
Yeah.
Poof.
That tangibility offers a psychological comfort. I think that shouldn't be underestimated.
Yeah.
It's something people have understood and valued for centuries.
Right. I get it. If the world feels like it's going haywire, you want something solid that you can count on. But what about those who say that, gold is outdated?
Sure.
It's a bit of a dinosaur in today's fast-paced digital world.
That's a fair point.
Yeah.
Gold may not have the same allure as, a hot tech stock or a trendy cryptocurrency.
Right.
It doesn't generate income the same way that stocks or bonds do.
So it's not about, getting rich quick with gold. It's more about protecting what you already have.
Precisely. It's a long-term strategy for wealth preservation.
Okay.
And in an environment where there's growing concern about inflation, cyber attacks, and these unpredictable government policies, it's easy to see why gold's appeal is enduring.
Yeah, speaking of cyber attacks, that Bybit hack really underscores the point that technology, while amazing, also introduces new vulnerabilities. No matter how advanced our security measures become, it seems like there are always going to be people out there, trying to find ways to exploit them.
Yeah, that's a key takeaway from this entire discussion.
Yeah.
As our financial systems become increasingly interconnected and reliant on technology, we also increase, the potential points of failure.
Right. It's like a constant cat and mouse game, between those who are building these secure systems and then those who are trying to break them. And when a hack like the Bybit one happens, it can really shake investor confidence, not just in a specific platform, but in the entire sector.
Exactly. And this goes beyond just crypto. Think about the growing frequency of data breaches, ransomware attacks, all these other forms of cybercrime that target businesses and individuals. It's a constant reminder that security needs to be a top priority, and that even with the best precautions, risks still exist.
So on the one hand, we've got gold, this ancient tangible asset that people turn to in times of uncertainty. And on the other hand, we've got this rapidly evolving digital world where new technologies are constantly emerging, creating both opportunities and vulnerabilities. It feels like a real tug of war between the old and the new.
And it's playing out against a backdrop of, economic and geopolitical uncertainty.
Yeah.
We've got inflation concerns, potential disruptions caused by government policies, and just this general sense of unease about the future.
It's no wonder investors are feeling a bit jittery.
And this is where it all comes full circle. If we connect these dots, we can see how these seemingly disparate events, a crypto heist, concerns about government spending, and this enduring appeal of gold are actually all part of a larger narrative about trust, security, and the search for stability in an uncertain world.
Wow. When you put it like that, it really does paint a pretty complex picture. It makes you wonder if there are other hidden connections out there that we're not even aware of yet. I'm starting to feel like everything is connected in some way.
That's a fascinating thing about these deep dives.
Yeah.
We start with these seemingly unrelated topics, and as we explore them, we begin to see how they intertwine and influence each other in, sometimes unexpected ways.
Yeah, it has been a really thought-provoking conversation. So we've explored, the appeal of gold in these uncertain times. We've delved into the implications of that major crypto hack, and we've, considered the impact of government policies on the economic landscape. It's clear that these seemingly, separate threads are actually interwoven in this complex tapestry. But what does all of this mean for investors like you who are trying to navigate these turbulent waters?
Well, I think the key takeaway here is that we can't afford to be complacent. We can't just rely on outdated assumptions or stick to strategies that worked in the past. This, interconnected world demands adaptability and,
Yeah.
and a willingness to challenge our own perspectives.
It's not just about picking the right stocks or diversifying your portfolio. It's about staying informed,
Hmm.
being aware of that bigger picture, and understanding how events in one area can, ripple out and affect seemingly unrelated areas.
Precisely. For example, you might not think that a crypto hack would have any bearing on your decision to invest in gold. But as we've discussed, these events are connected by this underlying thread of uncertainty. They both highlight the importance of seeking stability in a world where trust in institutions, both traditional and digital, is being tested.
Yeah, that makes a lot of sense. It's like the ground is constantly shifting beneath our feet, and we need to be able to adjust our balance quickly. What are some practical steps listeners can take to, become more adaptable and informed investors?
Well, it starts with a commitment to lifelong learning. Don't just rely on headlines or sound bites.
Right.
Dig deeper into the issues that affect the markets. Pay attention to, economic data, geopolitical developments, technological advancements. Read analyses from different perspectives, even if you don't agree with them. The goal is to develop this nuanced understanding of the forces that are shaping the investment landscape.
So it's about being proactive, not reactive. Instead of waiting for things to happen to you, you're anticipating potential changes and positioning yourself accordingly.
Exactly. And don't be afraid to question your assumptions. Just because something worked in the past doesn't mean it'll work in the future. The rules of the game are constantly evolving, and we need to evolve with them.
That's a great point. As we wrap up this deep dive, is there one final thought-provoking question you'd like to leave our listeners with?
Sure. Here's something to consider. In this era of rapid technological change, how do you define a safe haven? Will traditional assets like gold retain their status? Or will new forms of value emerge, perhaps in the digital realm? And most importantly, how will you adapt your own investment strategy to navigate this evolving landscape?
That's a fantastic question to ponder. It really challenges us to think critically about the future of finance and our place within it. Thanks for joining us on this deep dive. We'll be back next time with another exploration of interconnected events and their impact on the world around us. Until then, keep learning, keep questioning, and keep diving deep.